I mean, I think we already are in a recession. The data might, or they might not admit it, but in my opinion, we already are in one. The prices, we haven't seen that yet, but if you just ask any other person of how they're treating their finances at the moment, how much they're spending, people are holding back, right? The data is not necessarily showing it, but we're already in a recession.
Big week ahead for economic data. How should traders be positioned into this week and beyond? What are the top trades and investment themes for the rest of 2023? Anmol Singh is here to break this down with us. Anmol Singh is the founder of Live Traders and the author of Prepping for Success. We'll talk about some of his successful life tips towards the end of the interview. Anmol, thank you for being here. Thank you for part of my show, The David Lynn Report. Pleasure seeing you again.
Pleasure to see you again, and good to see you start David Lynn Report. It's awesome and great to chat again.
Thank you. You're an awesome trader, so I'd love to get your takes on how to, not just how to trade, but what to trade. In particular, this week, we're seeing two very important pieces of economic news this week: CPI data release, and of course, the Fed FOMC announcement. So traders are pricing in no hike, which means that they're expecting lower inflation as well. If you look at the consensus expectations for inflation, headline CPI is expected to go down to 4%, which is a big jump down from 4.9%. Basically, my question is, Anmol, what are your expectations for data this week? Are we expecting a pause in the Fed rates? Are we expecting inflation to go down, like consensus? How are you trading things?
Yeah, that's going to be the interesting part because inflation, if you really look at the numbers, they haven't really considerably made any headway of going down, right? They haven't really started the process. They're still pretty high. Most, like the economy and the prices that people are actually seeing in real life doesn't align with the data. The prices are still high regardless of that. Most of the people are expecting a pause. But from a trader standpoint, we're looking at technicals to make our decisions. So from that standpoint, market has seen already a pretty big run up in the last couple of weeks. So it is, for me, we're in the profit taking mode right now in our company. We're focusing on taking profits, locking it in. We had a great run from October, the decline of last year. Markets have recovered pretty healthily. They've recovered almost 50% of that decline that happened. So from our standpoint, we're looking to take profits in addition to just, holding a couple positions that we really believe in. Apart from that, we're pretty much selling out. Netflix was one of our biggest holdings, around 170. Previous time we chatted, we talked about that. That one went up to about $400. So we're in the mode of locking in profits. The value of cash is going to be something that we believe in is going to go up in the next few years. So we're trying to just, hoard as much as cash as we can for the opportunities that will prevent themselves, in the next 2-3 years.
Oh, let's talk broad markets first then. Can we pull up an S&P 500 chart, please, Anmol? And we'll talk about why it is that you're taking profits now. Are you expecting a pivot? Not a Fed pivot, but a pivot in the stock markets following this increase. I think the S&P is up something like 20% on the year. Nasdaq's up 26%. It's been a good year.
Yeah, and I think, technicals always lead the way. Technicals lead the way because even remember back then when we were chatting in our previous edition of the last time we chatted, there wasn't any indication of, Fed's raising or any of the data, but the price always started first. And then right about here is when we started getting the news about the Fed data. And then we got another decline from there on. So technicals always lead the way. So from our standpoint, because we're more of a trading firm than we are an investing firm, we took advantage of this rally by selling a lot of our positions and then rebuying them back in October, right? Just basically buying at the 50-period moving average, which we've done every single time. And it's been worked out really, really well for us. We did the same thing here. So from our standpoint, most of our positions are up 40, 50%, right? So at that point, we have to make a decision on, is the market going to end the year strong, right? Because I find it hard to believe, locking in 40, 50% is a bad idea. Because if you do that, then you're basically getting 4 years worth of market returns in 1 year. So we are expecting a potential pivot somewhere around the zone for 430 to 440, a pivot, which would be a sort of a lower high. If I was to just visually draw that for you, it would sort of look like this, where this was a lower high, this starts a trend, goes up till here, and then potentially getting a lower low. Now, what would be the event that causes that? That's yet to be seen. But there's obviously a lot of uncertainty going on geopolitically with the Ukraine wars, the Russia wars, the elections, indictment of the former president. There's a lot of uncertainty at the moment. which is why we think there's probably going to be a pivot somewhere around here, and then potentially another opportunity, just like what we got last year.
Okay, and why did you choose that level in particular?
That level, so based on technicals, usually you're going to get a lower high, which happens around 60-70% retracement, which would happen to be around this pivot over here, where if I was to zoom out a little bit on the weekly time frame, you'll see last time that's where we left that pivot. So usually around that price point is where we're going to get the next pivot as well. Right now, there's no resistance. There's no supply of shares until this level. So I do think the market will continue to float up over the next few months. And then we're probably going to get a pivot somewhere around later this year.
And this pivot that you're talking about, is that going to lead to another bear market or just a pullback? Generally, my question is, are we generally in a larger secular bull market and we're just going to get slight pullbacks, or do you think this is the end of this bull market?
No, long term, we're still in a bull market. We've never actually entered a proper bear market where markets are continuing to trend below their moving averages. It's still a bull market, but we're going to enter a period of sort of like a choppiness. I think the next 3 years, the value of cash is going to go up because we're not going to get any massive returns. It might even be a few years of just chopping around, but then eventually breaking out into new highs. So I think the next 3 years, we've been so used to and almost spoiled as investors of getting these type of returns that now we're going to enter a period of choppiness. There's not a lot of cash, new cash coming into the markets.
So you're going to be more allocated into cash, is what you're saying yourself?
Right. I'm more allocated into cash at the moment. We've pretty much taken profits on almost all of our positions. We had Uber and all these positions down over here, which are up 40-50%. So except for Tesla, we're pretty much sold out of everything at the moment. Tesla's only our position that we're holding. But we're going to continue to trade the market. So when we get as we sold over here, once we get an opportunity to buy it back, we will buy it back. And we're going to continue to monitor and trade our positions rather than hold on to it for the next 10 years.
Okay, and let's talk about your individual positions now. So when you trade the markets, you don't buy the index, you pick stocks that you think will do well in that particular market. Is that right to say?
Correct. We will use options to, bet on the markets. If you think we're going to have a pullback, we're going to look to buy puts in this area. So we do trade the markets too, but individual stocks is the biggest focus at the moment because once you pick the whole market could actually be doing a whole lot of nothing. But if you pick the right stocks, as you recently saw with Nvdia, the AI theme has been, on fire. Nvdia, Tesla, even Oracle today went up because they bought a AI company today, right? They acquired a new AI company, and Oracle stock literally just shot up, right? Just gapped up today from 110 straight to 116 and continues to go higher right before earnings tonight. So that's going to be interesting to see. AI has been in play, and I think Tesla is the most underrated, undervalued AI play that people are still thinking about it as a car company or a battery company. But Tesla is going to be the biggest AI powerhouse.
Wait, explain that, please. How is Tesla going to be an AI company?
Sure. So let's just take a look at their FSD, the full service driving. The amount of data, that's an AI, right? That is basically AI. AI is making the decisions on where to drive the car, should we change the lanes or not. And the amount of data that they have of pretty much every country's, the roads that even Google Maps or all of those things don't have, right? So that is going to be, and they just got approved in China. That's huge. They got approved in China. And now next up would be India. So there's still so much expansion yet to do. So if you just take a look at the numbers of, how much it costs to get the FSD and just multiply it by where the trajectory is going, that's going to be the biggest play. I mean, just think about a few years down the line when Uber starts teaming up with Teslas, and that's going to be another thing to look into. So that, and if you notice, now this is not something as a big of a deal, in my opinion. The robots that he was talking about recently, the Optimus Prime type of robots that Tesla is going to come through, that is purely AI. So we're yet to see where that leads, but that's something to look into.
Let's talk about Tesla some more. So what was your entry point? Can you tell us about that? When did you get into Tesla?
Sure. So Tesla, I traded it twice. So once I acquired this stock right over here, and this is purely based on technicals where you get that sell off and look at the rising volume, right? That shows accumulation in the stock right at these levels. So I initially started a position at about $125, which was my average cost. I sold it into the 200 MA around the 217s, and then we rebought it around the $155 area. And that position I'm still holding. One thing we have done is we've sold covered calls on our position. So if Tesla does end up above 250 by this Friday, then my shares might be taken away from me. But the way we're playing it is look at the higher time frames. Look at that. Let me go ahead and just clean this chart up a little bit. So now we see this was a clear downtrend line on Tesla and on a weekly time frame. We have clearly broken through, right? We've broken out of this trend line. So the next stop, in my opinion, for Tesla is going to be this $305 area, which is I'm pretty confident of hitting that target. But the way the trajectory is going, I think Tesla is going to retest its all-time highs before 2025.
Before 2025, it's all-time highs. So what kind of upside are we talking about?
I'm looking at about roughly, 420 to 450, in terms of 2025. Now, Kathy Wood has a, completely different opinion. She thinks it's going to be $2,000, which it very well might be. And now with the deals, I mean, think about how the tables have turned, right? Ford, General Motors, now they're going to be using their adapters. And the EU, which rejected Tesla's adapters way back then, are now going to be forced to use Tesla's adapters because, well, General Motors, Ford, Tesla, all of them are going to be using the same charging ports. So it's going to be interesting to see how that plays out. So even though I don't agree with Kathy Wood's target of 2,000, I'm hoping conservative of $420 to $500.
Last night, I was watching a video about Tesla and electric vehicles. CNBC reported that in every single Chinese city where Tesla had a dealership, the German automakers see a decline in market share. So Mercedes, Audi, and BMW, wherever Tesla goes, those companies see a decline in market share. My question to you is this. I know Tesla is not just a car company, but that is still their primary business. A lot of these luxury automakers are catching up in terms of EV development, the performance of like the Porsche Taycan, for example, phenomenal car. Audi's making some great EVs, Mercedes as well. You've got people arguing that, Tesla interiors are inferior. And so basically what I'm saying is their competitors are catching up. Once Tesla had a lead in terms of EV performance, their infotainment system was better, and so on and so forth. Those areas are now starting. Their lead is starting to decline. Are you worried about Tesla being challenged by competing automakers?
Yeah, in terms of automakers, they will be challenged. It's just the nature of how technology works. People eventually catch up, and then there's players in that industry. And that's why I think their biggest business will be the FSD, right? They're going to end up licensing it to the other companies because the closest other, full service driving is Mercedes, but that doesn't even change lanes, right? You can't even change lanes. It's way behind. It's like 10 years behind of Tesla's FSD. So I think FSD is going to be their core business just a few years from now. And just think about the implications of that for other companies, even such as Uber, right? Biggest cost that they have is their drivers. 70% of their cost is actually paying the drivers, right? Because they only get a 30% cut. So they start moving into getting full service, right? Smaller utility cars from Tesla that are full service driving. Just look at the numbers, the volumes of cars that are going to be bought at that point. So I think because of their technological advantage, they're way ahead. And also they are, the cars go less obsolete. If you buy an Audi or a Mercedes right now, right, 5 years, 10 years later, it's an obsolete old car. Whereas with Tesla, they have software updates. Even if your car is 5 years old, they can update the software and make it up to par, and they would still have the ability of FSD that the older cars cannot. So I think that's where it's headed. It's almost like it's gonna be as synonymous as Apple iPhones. You see them everywhere. You're gonna start seeing Teslas literally everywhere.
Interesting. And do you think that people are starting to be worried about a recession coming up later this year, next year? Timing is debatable, but do you think a recession could impact sales negatively?
I think we already are in a recession. The data they might not admit it, but in my opinion, we already are in one. The prices, we haven't seen that yet, but if you just ask any other person of how they're treating their finances at the moment, how much they're spending, people are holding back, right? The data is not necessarily showing it, but we're already in a recession.
And do you think interest rates will fall this year or next year? Certainly interest rates impact people's decision to buy cars because their auto loans are impacted by interest rates.
I don't see them really coming down any time in the near future. They might pause or the number of hikes might slow down, but I don't see that they're going to start lowering rates anytime soon. Maybe after the elections is we're going to start thinking about it.
Netflix is another trade you have. Let's talk about Netflix. Are you still on Netflix right now?
Not anymore. As of like last week, we were just thinking about, okay, where would we want to hold on, what's the next likely scenario? So the reason we, I guess, did well on Netflix is because we had a really good entry when everybody else was selling. Nobody else wanted Netflix, right? Back in $170, $180 area. And I remember we talked about it in one of your previous shows. Nobody else wanted it. People were betting on it to go below 100. But we saw obviously more than 130% gain. So we're out of Netflix now. We're not in any Netflix anymore, and pretty much not in anything except Tesla at this moment. We had Meta, and we remember we talked about this different stages of the market: stage 1, stage 2, stage 3, stage 4, and how we discussed how everything plays the same way. So we got that stage 4 downtrend. We got that recovery. Now it could go up, it could go down. As a trader, there's not enough good odds. Similar thing we saw in the stock for Meta, but nobody else wanted it. Exact same pattern. Stage 4 downtrend, exhausted itself. We picked up Meta, and now it's all the way back up from like $80 to $270. And now it's in no man's land as a trader. So as an investor, it'll be a different approach. If you still believe in the company, I still think Meta, Netflix, these are great companies to hold on for the next 5-10 years. But as a trader, once you get an opportunity like this, where you have doubled your money inherently, you have to take advantage of that. In our firm, we call it, when the ducks are quacking, you feed the ducks.
Yeah, the question of when to take profits is crucial for every trader. How do you make that decision?
I make that decision purely based on the monthly chart. So, for example, if something is up 1, 2, 3, 4, 5, 6, 7, 8 months in a row of continuous up move, that's it, right? Just to playing the odds. Same way here, when the Meta was falling down, it had multiple red months in a row. We took advantage of that. So always playing contrary to what people are expecting is what we're looking at. So we took our profits just purely based on it going up, 150% for us, and we get 8 months up in a row. So we just take a bet on the odds at that.
Do you set price targets for yourself?
Usually we do. So in this case, I set a price target roughly around the 200 MA on the weekly time frame, which was 233, 234. So that's where we went into our starting to sell our positions, and then we trail it every week's low. So if it takes out a prior week's low, we'll use that as a guide to say, okay, that's our profit taking guide.
What if it hits your target, your prior target, and you still see that momentum is still on the upside? Do you adjust your target, or do you say, you know what, enough's enough, let's just stick to our original target?
So we'll always lock in some. So I might sell a third of my position, right? Because you don't really necessarily want to sell everything at once, and also not causing that market impact if you're trading a bigger size. So we usually sell in thirds or quarters is when we start liquidating our positions. So when our initial target is hit, we always sell some. Usually it's a third or a quarter of our position. And then the rest, we put a weekly trail, meaning if it takes out a weekly last week's low, we'll use that as a guide to take all of our profits.
Okay. So we've talked about your two big positions right now, Tesla and, well, it was Netflix. And let's back up and just talk about trading in general. If someone were to say to you, Anmol, I agree with you, we're already in a recession, how should I trade then? How should I trade this period of choppiness that you were talking about? So what are some of the recession trading strategies or plays that you would employ yourself?
The biggest thing in recession markets or in a choppy market, right, whether it be recession or not, the way to trade a choppy market is to not overstay your welcome. Meaning not looking for home runs. You're not becoming an investor. You have to have a trader's mindset, meaning taking advantage of when you get those deep discounts on Meta and Netflix, right? Taking advantage of that. And then once you do get the bounces in your favor, start locking in profits. The mistake that a lot of people make is they expect things to come all the way back up, like Zoom, Coinbase, they're all going to hit their all-time highs. And now you're holding on. So you are going to be holding on for a really long time. The way to trade choppy markets, if something is chopping back and forth, you want to be the one buying at the bottom and selling at the top. So you have to be quick with your profit taking. Don't expect home runs. So what we've been doing is we're just taking advantage of the small pockets of movements that we're seeing, which is called swing trading, taking advantage of just the swings. We're not looking to overstay our welcome.
What do you think, what sectors or kinds of stocks do you think will do the worst over the next 12 months? In other words, if I asked you to short something, what would it be?
Short something. That's a very interesting point right now, is that I would, in fact, we're looking at the markets as a whole, just the S&P or the Qs, the NASDAQ, looking to short that. Just we have some levels in mind we talked about on S&P, like about, get to 450, 440. That's somewhere where we're looking to play that for the reversal to the downside. Sectors, I think marijuana sector is still going to remain low. MSOS is the ETF, or MJ is the ETF for that. Marijuana has way too much supply at the moment. And because of that, I don't think we're going to see any increase in prices until legalization happens, which at the moment doesn't look like it's going to cause any impact. So I think if you're in marijuana stocks, I wouldn't expect much. I don't think you're going to see any recovery before 2025.
I remember when Nvdia was beat earnings 2 weeks ago and it shot up 26%. And then briefly surpassed $1 trillion in market cap. People were saying this company has a 200 PE ratio. That's ridiculous. And there were all sorts of social media posts about why that's not sustainable. Do you think that's overvalued right now?
Yes, I think Nvidia is overvalued right now. I owned a good chunk of Nvidia as well. I sold it literally the day before it actually rocket shipped up, on that. But with Nvidia, right now, that's the thing with fundamental analysis is that all the ratios that people looked at historically to judge a company, right? Like PE ratios, none of that matters anymore, right? It literally doesn't. The PE ratios can be as high as you want, as low as you want, and it wouldn't matter at all. It's all about the sentiment. We're literally in a market purely driven on momentum and sentiment. It's not really driven on fundamental analysis at the moment. So Nvidia, I think, is overvalued. If I was in Nvidia, which I was, I've already taken profits on that. But I will look to rebuy in case we do get a pullback on it.
I guess it doesn't indicate where the price is going to go, the PE ratio, where any valuation metrics, but it gives you, I guess, a sanity check. Like, let's say you're entering a stock with a 200 PE, you're going to feel less good than entering a stock with a 50 PE in the tech space, if there is such a thing, right?
Yeah, and we talked about, I think, a couple of years ago when we were chatting, and we talked about how we're going to see PE compression happen, right? And from a technical standpoint, that means prices are going to come down. From a fundamental analysis standpoint, that would mean the PE compression is going to happen, and that's what we've seen over the years. But Nvidia, I think, has surprised a lot of us. And I think right now it's purely driven by AI, the AI sector and how they're getting into that. So it's all sentiment at the moment, in my opinion. Momentum play at this point.
Right. Do you think this AI trend is going to be a sticky investment trend in the sense that there's actual growth involved, or is this just some sort of fad that's going to go away for traders?
So AI is not a fad, but the theme in the stocks is always a fad. We always see this over and over, right? When COVID, we saw the home stocks that they went up like this and then they came right back down. Then we saw that with pharmaceutical stocks that ripped up and came down. So this is all just a theme. We see that over and over. Every 3 to 6 months, market finds a theme. Once there was a marijuana stocks, then there were the drone stocks. Eventually, everything does, when the hype dies down, pure winners are going to exist. I still think Microsoft, Google, Tesla, the big players are still going to remain the big winners in this AI space. So people looking at the smaller companies, not the bet that I would be making at this point.
Yeah, interesting. We'll follow up on some of those stocks at a later interview. Finally, I want to talk about your book a little bit, Prepping for Success. There's a lot of themes you must have discussed. Tell us about it. You told me offline it's sort of an introspective review of your own life. Tell us some of the key lessons you've learned, not just as a trader, but working for yourself, an entrepreneur, and some of the mistakes you've learned and what people can learn from you and from this book.
Definitely. I think the biggest success key I talk about all the time, which is the biggest difference maker, is integrity, right? Being a man or a woman of integrity, doing what you said you're going to do, and then doing it when you said you're going to do it. I mean, just think about how much your life would be better if you did every single thing you said you're going to do, and you did it when you said you're going to do it. So that applies even to investments and trading, because a lot of time traders say they're going to do something, but when the opportunity present themselves, they don't do it. They don't act on it, right? I would love to buy Tesla if it comes down to 100, and it does. And now they're fearful. I think it's going to go down to 80. It's going to go down to 50. So you never acted on that. And the same way you could say, from Monday, I'm going to start working out, and then you don't. Your life's not going to get any better. So the number one thing to live your life by is integrity. Do what you said you're going to do, and do it when you said you're going to do it. That would be the biggest needle mover in anybody's life.
A lot of people have integrity when they make promises to other people, meaning that if I say I'm going to do something for you, Anmol, I follow through, and that's nice. But then when I tell myself I'm going to go to the gym on Wednesday, I slack off. Why do you think some people have more of a sense of responsibility to others than to themselves?
I think because they've entered a pattern of negotiating with themselves, right? Because we kind of negotiate with ourselves. Well, I don't need to go right now. I could do it tonight. I'll go tomorrow. It's fine. There's not a big difference. And we start entering these negotiation battles with ourselves, and that, ruins the quality of your life. And those little things we don't notice. A lot of times, people say, but I am a person of integrity, Anmol. And I'm like, okay, really? When's the last time somebody called you and he said, hey, I'm just in the middle of something. Let me call you back. And he never did. Or you saw an old friend, you're like, hey man, good to see you. We should totally catch up. And then you never made any effort to catch up. Those small little things that we might not even notice cause a lack of integrity. And then that creates low self-esteem, low self-confidence. And you start beating yourself up on it, and you don't follow through on what you said you're going to do. So you're going to start to train your mind rather than apologizing for it. Say, okay, here's what I'm putting in place to ensure that happens. Meaning Wednesday, I want to go to the gym. Okay, 12 p.m. Schedule it on the calendar. Let's make it happen. So I think that's what people need to live their life by, is just schedule everything, making happen. And that's been my biggest priority as well. You mentioned the working out. That's my biggest priority for this year is getting it done and getting back to a healthy lifestyle.
It gets back to people making resolutions in the new year and they don't follow up. I have you looked into that? Is there some sort of psychological reason as to why people make resolutions and don't usually follow up on them?
Yeah, because they like the idea of the end result, right? They don't like the process that's going to take to get to the end result. And the New Year's resolution is just an easy thing that people come up with. But why does it never happen? Because they never scheduled it, right? They never scheduled it. They're like, I'm going to go to the gym on Monday. Well, what time? I haven't thought about that yet, right? So let's schedule it to ensure that happens. Just think about what is an ideal day in David's life, right? If I did this would be a perfect day. Great. Let's schedule all of those things.
Well, how do we make ourselves accountable to our own goals and resolutions? I read this somewhere a while ago. This really made me think. If you're working for somebody and your boss tells you to do something, assuming it's a reasonable request, you're going to have to do it. Otherwise, over time, you're going to get fired, right? So why is it that when someone else tells you to do something, you do it, but when you tell yourself to do something, like you said, you negotiate with yourself, you slack off, there's less self-respect, was what this post said. Why would you respect your boss more than yourself? This is a very interesting concept.
Yeah, I think it's also driven by ego, because we don't want to look bad in other people's eyes, so we'll end up doing it for them. When it comes to us, there's no accountability, there's no consequence. And that, what I've noticed even in trading and investing, is the biggest reason people fail is they don't have a consequence deep enough that's going to hurt. So a lot of times when I'm coaching traders and I'm guiding them to hold on to the trade long enough for you to profit, they end up selling it too soon. Right. But if I give them consequence, hey, if you sell too soon, if you break your trading plan, just like a business has a business plan, a trader has a trader plan. So if you break that trading plan, you're going to have to do X, Y, Z, whatever that consequence might be. So that is how, even in the prop firms that I traded for, we had consequences. You lose X amount, you're locked out for the week. You can't trade anymore. Right. So creating that consequence system is really important, so that to ensure that you're going to follow through on that. And that's why we listen to other people. We want to be right. We want to look good in other people's eyes.
Yeah. Finally, last question just on this is, how do you set objectives for yourself that are realistic? Because it's one thing to be ambitious, but sometimes I've noticed, even for me, if I set too ambitious targets for myself and I end up missing them, that over time wears down on my own self-esteem and self-confidence.
Yeah. So the best way to do it is, first, I write down what are my big goals. And that could be really audacious, right? Really big goals. I'll write those down, which I call my rocks. And then on the next sheet, I'll break down, okay, to do that big thing, what are the 20 small things I need to do? And I'll start scheduling those. Then now my goal is not into this big mountain that I want to encounter, right? Let's say you want to hit 1 million subscribers on YouTube, right? Now that's a huge goal. But now to get there, what are the next 20 things I need to be doing, those smaller steps, right? So then I would write those down and I'll start executing on that. And I will only judge myself based on how I'm doing on those smaller steps. But everything that is on your to-do list has to have a due date. Without a due date, it's just up in the air. Give it a date. You're literally putting it out in the universe, right? Okay, this is the date that's going to happen by. And then you get it done. And then you take those dates, open up your calendar, schedule it on there, right? So that's the way to do it.
All right. Well, Anmol, I appreciate your time. We'll follow up again next time on your trades. Thank you for being here today.
Thanks for having me on. It was always great chatting with you, and great congratulations on your new show.
Thank you very much. And where can people learn more from your work besides your book?
Yeah, definitely. If they're interested in trading, livetraders.com is where they could head out into. But if they want to get in touch with me, Twitter and Instagram is the best place. My username on both of those is at Delta90, DELTA NINETY.
Excellent. We'll put those links down in the description below. And to the viewers, thank you for watching. Make sure to check out Anmol's work and your YouTube channel. You didn't mention your YouTube channel, but you have a big channel as well, Live Traders. We'll put a link down to that as well. All right. Thank you for watching, and don't forget to subscribe.